It's Brian Shannon from AlphaTrends.net. Today's Friday, the 31st of July, 2020, and we just finished up a nice month for the market, and the week was pretty strong as well. We did see a little bit of weakness, of course, in the Biotechs. The Dow was down slightly. Let's take a look at the charts and make sense of it. The S&P 500 here on the daily time frame first, you can see that we held this key level, and as well as the rising 20-day moving average, and we are still in a primary uptrend with a rising 20 and 50-day moving average. During the middle of the week, it seemed as though maybe we needed a little bit further rest as we broke below the 5-day moving average, but the market recovered quickly and it held above this key level right in here. So I think moving forward the next week and a half or so, maybe 2 weeks, 319.5 to 320 is the key level of support that we want to see continue to hold. And of course, we're right up against these highs, recovery highs. So, making a breakout purchase here, some people like to do that. Not me, not when it goes from 321 to 327 to break out. I'd rather see a pullback first and then see that that you can buy it somewhere like this with a stop underneath a higher low. Either way, new money, it's probably not the best purchase, but it is still in a confirmed uptrend, and the NASDAQ is still in an uptrend as well. We spoke last Friday about the fact that the pattern of higher highs and higher lows had been broken. I'd also said that we don't want to short because of that break, but instead it went more likely that the rate of ascent is going to need more time correction to digest than just maybe a deeper price pullback. And we're in a little bit of a range here right now, 251.5 to 269-ish, and but overall the buyers are in control. When you have a sideways time consolidation, you give the benefit of the doubt to the primary trend, which is still clearly higher, as this market is at all-time highs still, or just off of all-time highs. We saw that a key level was held in here as well this week, down at that 256.5 level. I think next week the most important levels, first and foremost, would be right here at about 260, and then that 257 level. If those continue to hold, buyers are in control. We're in the middle of earnings season, and this market is being driven by the big cap names, which continue to outperform. Apple, huge move after earnings. AMD this week was a big winner. Amazon as well. Next week, Beyond is an interesting one to keep an eye on. They've got earnings due August 4th. You can see the volume weighted average price from the IPO as well as from the all-time high and the March low all come together right in here, and we have the catalyst of earnings next week. So that's one to keep an eye on. It is not something that I own yet. We've got a declining 5-day moving average, but it's certainly a stock of interest. Going back to the indices, the Russell 2000 continues to hold above the 200-day moving average. You can see today we came down and tested the 20-day moving average. So this market still feels like it wants to get some momentum behind it and maybe begin to show a little bit of outperformance. It's been a frustrating trader in that it broke a lower low in here today. It broke below that volume weighted average price, but the good news is it recovered quickly. So if you're looking to get involved in a one of the major indices, I think the Russell 2000 is probably one that will outperform moving forward, and I think a worst case stop would go below today's low. Semiconductors, we've still got the same pattern here, higher highs and higher lows above a rising 20, 50, 200-day moving average. It is a clear, undisputed bull market regardless of what time frame you're on, and we continue to see again that we're above a rising 5-day moving average and the buyers are in control. The Biotechs are the one group that underperformed this week. Last week we talked about not wanting to buy them at this, or not wanting to short them certainly, and that it was a little bit oversold, probably due for a bounce. Well, it got that bounce, and it bounced right up to the declining 5-day moving average. So this was last Friday. We saw that there had been buyers in there. It rallied up, which also you could look at that and say, well, from this decline, it rallied 50% of that move. So it rallied up to the declining 5-day moving average, and today again we saw it right at that 5-day moving average and then continuation lower. So I would say that the Biotechs, be careful with this group. It's again, I don't want to short this market because we still have that rising 50-day moving average, but I don't want to buy it either because we're below a declining 5-day moving average. So I think it's just best to leave this one alone. The financials, we've been looking for this group to kind of try to take a leadership role. It's yet to do so. Let's erase that and zoom in on what we have here. Two pretty low range days here in the financials as it holds the conjunction of the 20, that's the blue, and the 50 green 50-day moving averages. What we're also interested in is the volume weighted average price off of this high. We're not able to really see that pattern of higher highs and higher lows emerge yet, but we're clearly in an important area. So let's look at the 30-minute time frame. I think moving forward into next week, this week's low is going to be very important for the market to hold. If it can hold above this $23.70 level, then I think you give the benefit of the doubt to the buyers. So, depending on the type of trader you are, whether you're looking for momentum or just looking to get in and trade against a level, this is where your stop should go, is what I think. The market is giving so many good opportunities, and not just the big names. This week we had BLNK that we got involved at $7.30. Maybe you saw LITE. I'd mentioned that at $88 a share on Twitter. There's still a lot of great setups. For instance, VIR is one that we've traded a number of times successfully at Alpha Trends. You can see it's right at this prior little band of resistance, and that's becoming support with a rising 20-day moving average. Over to the 30-minute time frame, this is what I'm looking for here. I don't want to buy, this is the key level of resistance right now at about 49. I don't want to buy it there. I want to see it come up to the volume weighted average price from this peak, and then perhaps pull back a little bit, and then to buy it as new strength emerges or above this level. The thing is, we would want to see the 5-day moving average start to flatten out and turn higher. That would be the indication to me that the buyers are gaining back control on the intermediate term time frame, which puts them in alignment with the daily time frame. That's the whole concept of my book, Technical Analysis Using Multiple Time Frames. Other names to keep an eye on, RIOT is a nutty little stock that is RIOT blockchain, and of course Bitcoin is moving. This stock can get moving with that. It's highly speculative, but it does trade quite a bit of volume, almost 10 million shares per day. I think it's still a little bit early here. The volume weighted average price from this gap, you can see, held supply is where we saw supply today. So maybe the stock does something like this and gets going next week. But again, that one's highly speculative. Another one I'm looking at is AAOI. This one broke out of a little flag here today. You can see the volume pattern, strong volume on the up moves, lighter volume as this stock consolidated. Today we saw a return of volume. The problem with this stock, earnings due August 6th, so just be aware of that if you buy the stock ahead of the earnings, it's possible the stock could completely implode when they do report earnings. But the weekly chart looks like maybe it's going to run up towards $16 per share, where it's been just earlier this year. I've spoken a number of times about INSG. If I typed it properly, you would see that's what the chart looks like. Here's a weekly chart, and more impressive I think is the daily time frame. We broke some key resistance in here on a surge in volume, and then going down to a 15-minute time frame, here's what we're looking at in terms of the volume weighted average price from this recent move. You can see that move began here, and that's been holding the support. So maybe getting back above this week's highs. Right now you would probably have to put your stop down at about $12.60. This is a 5G play. They also have earnings though, August 5th. So always be aware of when the earnings are due. I think it's a Chinese company, HUYA, HUYA. You can see I've got these volume weighted average prices from the IPO, from the all-time high, and we're holding above those. Now on this daily time frame, it is a little bit of a choppy stock, and it's had a bit of a run, so I wouldn't want to purchase this because it's just come from 22.75 to 24.75. I'd rather see it do something like this and then maybe get going. So this is the type of scenario that I outline each and every day for alphatrends.com. .net subscribers. And if you haven't taken a look, take a 2-week trial and see if it's right for you. What we look at is not always the big names that everybody's already aware of and you're familiar with, but instead some of the overlooked ideas with great chart patterns and low risk, high probability setups. That's all. Thanks for listening. Have a good weekend.